Hello fellow compounders, welcome back. Do you have $1,000 you'd like to invest? Is this your first $1,000 or is it part of an ongoing investment program? In this video, I'll review what I would do if I had $1,000 to invest today. Whether you are a first timer or an experienced investor, I'm certain you'll find a couple of ideas that will be useful. I'm also going to be sharing my 6-fund ETF portfolio that I have configured in my M1 Finance account. You should be able to easily install it in your M1 Finance account if you have one. This video is for educational purposes only and should not be considered financial advice. I am not your financial advisor and you are responsible for your own financial decisions. Investing your first $1,000 is an exciting milestone in your financial journey. The path you choose will shape your future investment habits, so it's crucial to make well-informed decisions. Before we begin exploring investment ideas, I'd like to confirm some things. I'm assuming that 1. We already have a financial safety net in place. This means that we have an emergency fund of 3 to 6 months worth of living expenses. This is to cover any sudden financial needs. 2. I'm assuming that we have paid off all high interest debt. This means credit cards with interest rates in the double digits. I don't mind having some debt, like a mortgage on a rental property or a home, but credit card debt is really, you shouldn't have it. Pay it off. Number 3. We have clear financial goals. In my case, I'm investing for financial freedom, known as retirement, or as a work optional lifestyle. I know my number. Do you? This means that I already know how much money I'll need to have for a work optional life. If you don't know your number, check out this video. And number 4, we know the 2 cardinal rules of investing in this club. A, don't lose real money, and B, always be compounding. Okay, now that we got that out of the way, show me the money. What to invest in? I'll answer your questions for 2 audiences. The everyday experienced investor and the first-time investors where $1,000 is your first investment. I'll start with the experienced investors. In the big scheme of things, investors fall in 2 camps. Camp number 1, the passive or defensive investors. You know who you are. The ones who really are not too interested in doing investing homework. You just want to set a plan in motion and forget about it. Practically, you want to have little to no work and receive passive income. Am I right? The second camp are the active or enterprising investors. These are investors who are willing to do the research and get involved in making investment decisions. You want to know about the businesses you invest in, and you also expect a better return than average. So, if I were a passive investor investing $1,000, I would do the following. Number 1, my $1,000 would be part of a dollar cost averaging program. I would be adding $1,000 monthly to my automated investment account. Second, I would be using M1 Finance, which I'll give you a quick tour of my M1 Finance account setup in the next section. 3, I would use a simple portfolio that would be rebalanced automatically by the system. So I wouldn't do anything. I mean, basically it would be set on automatic. Here are the 3 portfolios that I would use. I would use one of these 3, but if I were starting out, I would use either the 2-fund portfolio, which is Buffett's portfolio, what he recommends using, which is set up as follows: 90% in VOO, which is the Vanguard S&P 500 ETF, and 10% allocation in VTIP, which is the Vanguard's Treasury Inflation Protected ETF. My second portfolio is the 3-fund portfolio, what we call the Bogleheads 3-fund portfolio, which is composed by VTI, which is Vanguard's Total US Stock Market ETF, and the second ETF is VXUS, which is the Total International Market excluding US, and the third ETF is VND, which is the US Bond Index Fund. And my allocation would be a 60-20-20 for this portfolio. And I did a video comparing both the 2-fund and the 3-fund portfolio, and here's the link. And the third portfolio is my 6-fund portfolio. This is the one that I'm actually using currently. It's composed by 6 funds: VTI, VXUS, VVR, AVDV, VNQ, and VNQI. I'll review those in the next section when we go through my M1 Finance setup. Now, let's review my M1 Finance setup and take a look at my 6-fund portfolio. Okay, so here we are in M1 Finance. This is what I call my Core 6 portfolio. I started it in February of last year, and currently it has around $8,000 and change dollars. And basically what I do here is I put in $100 every week, and the system automatically allocates it to the different ETFs. It's a fractional share system, so you don't have to buy the entire one share of any ETF. If it's $100 split in 6 ETFs, it would buy fractional shares to make the allocation. So if you see over time, it has been increasing because I've been adding $100 every month. And last year was not a great year for stocks. It was pretty down, but because it was a disciplined approach and we were dollar cost averaging once a week $100, it actually did fairly well because we are up, given we were buying stock when it was down all last year. Now, with the stock market up, we're still buying $100 every week. So anyways, sidetrack, sorry about that. We're going to see the portfolio. So the portfolio is really made up of 6 ETFs. Here are the 6 ETFs that I use in my Core 6 portfolio. The Vanguard Total Stock Market Index, VTI, which is all the publicly traded stocks in the United States. And my allocation here is 48%. It used to be 45, but look at the bold numbers, which I just reallocated in the last couple of days. But my current allocation is 48%. That's my target. Second ETF is VXUS, Vanguard's Total International ETF, excluding the United States. So that's my international component of stocks. That ETF has about 7,000 or 8,000 stocks around the world. So combining VTI and VXUS, I have 10,000 businesses that are in my portfolio. That allocation is 20%. The third component that I use is Vanguard's Small Cap Value ETF, because I want to give the portfolio some extra growth by allocating money to smaller companies. Smaller companies tend to do better over the long run than bigger companies because they have more space to grow. So I'm allocating 10% of my portfolio to that fund. And the other part, let me jump around a little bit. I'm going to show you the international side of that, which is the Advantis International Small Cap ETF. This invests in small caps outside of the United States. And my allocation for that fund is 7%. Now, the other component are the REITs, Real Estate Investment Trust. I like investing in real estate, and this is a way for me to get real estate exposure without having to own and manage real estate. And this portfolio, compared to the 3-fund portfolio of Bogleheads, they use BNDX, which is a bond component for income, okay, or interest income. I don't use bonds. I'm using the REITs as my income component. So I'm using VNQ, which is Vanguard's Real Estate Investment Trust ETF. That's the US side. I'm allocating 10% to that ETF. And for the international side, I'm using Vanguard's Global Real Estate Investment Trust, excluding US, and I'm allocating 5% to that ETF. So there you have it. My 6-fund portfolio, which basically you can allocate any amount of money. And since we're talking about $1,000, we will be allocating $1,000. You should be allocating $1,000 every month to this, or every quarter, or whatever your investment program dictates. In my case, it's $100 a week. Other things that you can see here. Oh, and I'll be sharing this portfolio and leaving it in the links below. So M1 platform is a very good platform for either people that are beginning to invest or people that just want to have it automated. It's one of the best automation platforms for investing that I've experienced so far. If I were an active investor, I would invest the $1,000 by adding to my coffee can portfolio. I would either add a new component to the portfolio or increase an existing investment. The coffee can portfolio is a set of individual stocks that I plan to keep for a very long time. I expect to hold them for more than 10 years. Having a long holding time forces me to be very selective. I made a video about coffee can investing, and here's the link. My current holdings in my coffee can portfolios are GOOGL, Google, or Alphabet, and MBUU, which is Malibu Boats. I'm going to be adding with my $1,000 Domino's Pizza, ticker symbol DPC. Domino's is a restaurant operator and franchisor of nearly 20,000 global stores across 90 international markets. It generates revenue through the sales of pizza, wings, salads, sandwiches, and desserts at company-owned stores. It also earns royalty and marketing contributions from franchise-operated stores. It runs a network of 26 US and 5 Canadian dough manufacturing and supply chain facilities. The facilities centralize purchasing, preparation, and last-minute delivery of the firm's US and Canadian restaurants. With roughly $17.7 billion in sales in 2022, Domino's is the largest player in the global pizza market. In the US, it has around 20% of the market, ahead of Pizza Hut, Papa John's, and Little Caesars. Domino's has a return on invested capital of 60% plus, which is out of this world. It's a money-making machine. Its average restaurant sells about $1.3 million per store, compared to $1.2 million of Papa John's and $860,000 of a Pizza Hut equivalent unit. Valuentum, one of my third-party providers, puts Domino's fair value at around $360 per share, and Morningstar puts it at around $385. Currently, it's trading at $392 per share. I would prefer to buy it a little cheaper, obviously, but at this price, it's a fair price. Given that my $1,000 is part of a monthly buy, I'm okay starting a position at this price. This is a best-of-breed company, and as Buffett says, it's better to buy a wonderful business at a fair price than a fair business at a wonderful price. I did a review of Domino's from a dividend growth perspective in this video. If you haven't seen it, go ahead and check it out. Now, for the first-time investor, this is what I would tell a 20-year-old me first-time investor. If I had my first $1,000 to invest, I would first invest in improving your skills to be able to earn more money to invest. Maybe take $200 out of the $1,000 and invest it in education. Things like enrolling in an online class to build more money-making skills in something that you're interested in. Maybe it's photography, videography, or JavaScript programming, or home automation. Whatever adds value and that is within your circle of interest. In my case, when I was much younger, I was interested in real estate. I studied and got a real estate broker's license, and I learned how to buy refurbished homes and resell them. So I did a lot of buying and fixing up homes in my early years. And number two, with the other $800, I would invest it in a stock index fund like Vanguard's S&P 500 ETF, ticker VOO. The S&P 500 is a basket of the 500 largest publicly traded businesses in the United States. When you buy VOO or any fund that invests in the S&P 500, you are becoming an owner of those businesses. You get a cross-section of the largest businesses in America. If you haven't seen it yet, I made a video on how to invest in the S&P 500. Here's the link. That's it, plain and simple. You first improve yourself to increase your earnings so you can have more money to invest. Then the following $1,000 should continue going into index funds, S&P 500. Invest in index funds until you have over $100,000. At that point, you can do more active investing if it's something you're interested in doing. Some people just prefer staying as a passive investor and just investing in mutual fund, and that's okay too. By the way, I'm going to leave links in the description to M1 Finance and links to my 6-fund portfolio setup for M1 Finance if you wish to use it. If you don't have M1 Finance and would like to sign up, please use the link in the description below. You will receive a sign-up bonus and it will help the channel at the same time. Please leave any questions in the comment section below. See you in the next video.